Good morning, everyone. Welcome to our Thursday morning trading session. The markets just opened after a rather quiet night. You're going to see here in a moment. So let's start here with the NASDAQ on the Eagle. What's interesting is the trade forecaster says we're going to be in trend mode today for 166 minutes right now, which is going to take us pretty much through the morning. We'll see whether or not that holds true. Very, very quiet in the overnight. The market's retreated back to the hard edge, signaled a couple of red bar buys, haven't tripped yet though. They haven't had a whole lot of follow through. So we'll keep a lookout for that. So right now, out of the gate, the NQ looking a little bit more bullish, but it is early. Oh, here we go. We're getting warmer now. We're just about to flip over on the ATR. I'm going to use this bar that flips over the ATR actually as our filter, so to speak. In fact, I could probably set up to buy above there. Now, this is all still very early. It's all a little bit of a, I don't want to call it a crapshoot. It's not really a crapshoot. We are getting a quality signal here. There we go. Now we've flipped over on the ATR. That bar is finished forming. I'm going to use that bar as the guide. We're getting a similar trend change signal here in the Falcon. There's still time to get, oops, no there's not. I was going to say there's time to get a late filter entry on the Falcon. You could have set it up like this, but the market just blew past the entry there as we engaged a couple of sell orders. We'll see if we can't come back with the trend line touch. And we are getting a first micro macro cross now. So the buyers showing their hand early. Whether or not that's going to have any follow through to it, well, that's the $64,000 question, as they say. So still working on a first micro macro cross here. The problem with this trade, of course, is covering the trade deep enough to avoid a macro pullback here, which is very possible. And let's take a look here what's going on the Raptor. Oh, that's not nice. That little spike there in the histogram. Sometimes that's indicative of stop running. This swing high here is the big deal. So the Raptor, it actually did produce a signal. Let's do it like this. The Raptor did produce a signal right here. It was our trend change signal. As you know, I don't like to get too crazy early on. Oh, well, so far so good. So the first micro macro cross managed to hit our profit target. So the buyers still continuing to be fairly strong. Crude oil tailing off this morning. Let's take a look at crude oil here on the Eagle, which gave us a very nice signal just pre-market. A couple of green bar sells through the overnight, similar to what we were just watching in the NQ, same but different. The NQ we're looking to buy. Here the crude oil market, green bar sells, very little follow through, and then pre-market fell off rather quickly. So crude inventory this morning, I forget exactly what time. 1 second here, I will find out. $11 a.m. So natural gas actually out early today. So 10:30 for natural gas. Those are Eastern times, of course, and 11 a.m. for crude. Unfortunately, or fortunately, we'll see how it pans out, but we got tagged at break even on our Eagle trade here. We'll see now whether or not they can hold it together. All right, so our macro pullback here never materialized. It's actually the market's starting to unwind a little bit here. We might get a red bar buy, given that we've got some sort of support zone that we're coming into. But it's starting to look like the market is unwinding. We'll see. Still a little early to tell. Okay, this red bar buy just failed, or it didn't materialize. Notice here on the Geiger counter, another spike in the selling. So we saw a spike in the buying earlier, and then the market topped out. Now we've got a spike in the selling, which the programmer says is indicative of stop running. So we'll see. We'll see whether or not they bounce from here now. And there they go, a little bit of a bounce again. Crazy action this morning. Okay, we did get a raptor signal here that I'm too late for now, but let's roll this over. And it too is not having any follow through. Yikes. Not a lot of fun. Yeah, like Joe says, chop chop. All right, here's a green bar sell. You know what? I'm going to sit on my hands here for the moment. I think, well, I was going to say, I think we're going to see the market tail off here a little bit. When the market lacks direction, it's eventually going to give up, and in most cases, it will head lower. It's kind of like the gravity thing. Notice all the yellow bar clusters that we have here, telling us that we're in a sideways market. And you know how I like to deal with the sideways market. I would much rather just let the market chop around, get outside of this range, and then we'll look at taking a trade. So there was enough there for a scalper's profit, but not much more. All right, we're coming back here with yet another buy signal. Here too, we're still against the ATR. So I'm going to let it flip over on the ATR, which means this bar needs to close higher. We're up against a whack of resistance here. How much resistance in a whack? Well, just take a look right there. And I should, just for interest's sake, let's shoot a trend line across the bottom. And now they're tailing off again. Oops. Okay, so we had a couple of green bar sells here. Depending how you managed your stops, I can't tell you that I would have held my stop up here. I would have gotten my stop to break even. But we did get another green bar sell right here, which is getting some decent follow through, challenging the bottom end of the trading range. And just might lead to a commitment. Maybe. Yeah, Ricardo, you're right. Ricardo says we got a triple bottom sitting here at 45.31 and a quarter. So we've just hit it again. Does anybody else see what this is? It's also a rule of three, isn't it? We have a bullish band. We have 1, 2, 3 signals against the hard edge. We have had a test of the extreme. All right. I'm going to do a little reversal here and look at trading this rule of three formation. Now, the rule of three I could have taken right here on the hash mark. There's nothing wrong with letting the signal trip and taking a second push on the entry. Let's see what's going on the Falcon. Oh, and we're getting a first micro macro cross here also on our Hawk. They're going to run away on me now. I was hoping that they would come back just a little bit. I was going to say the problem with this first micro macro cross is that we probably got to cover it up here somewhere. But you can see that the market made a very nice progression through the lows. And we had comparable trades on the Falcon and the Raptor as well. So a fairly decent signal all the way around. So here's our Raptor signal. Now it looks a little bit different on the Raptor. The Raptor, you're going to get these types of situations where you're going to get these bull and bear flags forming. The market came out, produced our with trend signal right here. This is our essentially our trend change signal on the Raptor. So the band has flipped over from bullish to bearish, and now it's printed a sell signal. So a nice little opportunity there on the Raptor as well. Trying to keep a lookout on the Geiger counter here to avoid some spiking. And our NQ trade has rolled to break even. Hooray! Oh, come on, you guys, don't leave me hanging. The problem with these breakout type scenarios is that the market will try to retest this zone, right? So if we have a support zone like this and the market comes down, breaks out, it is going to try to retest it and then continue lower. So this is the difficult part, because we don't know whether the retest will just be like this or whether the retest will drift deeper and actually lose the breakout. If it drifts too deep, well, then the market's no longer going to reverse and head lower. It will just end up chopping about again inside until one side or the other tries to make a break for it. The trade manager has already moved my trade to break even, as you see, so I'm taking a bit of a chance here. I'm at the market's mercy that they don't trade too high. Joe is asking, what size cloud are you using on the Raptor? I've been experimenting a little bit, Joe. Yes, my cloud is sped up some. I'm currently using an 8-tick cloud on the Raptor. And the reason I've done that, nothing special. Like I said, I've been playing with the settings. On the NQ, I've changed the cloud to 8 ticks and the filter to 10. Only because I was finding that some signals were not syncing up. If you're ever wondering if you need to make any adjustments, all you really need to do is track your signals. Find a good signal. So this signal obviously was a good signal. Actually, let's take it to the beginning. Okay, so this signal was obviously a good signal, right? Very good follow through. Now take a look at your cloud and your filter. Is everything in sync? Would you have taken that signal because everything printed correctly? If the answer is no, then your cloud or your filter might require a little bit of tweaking. Likewise, find a signal that should have been a good signal that failed. So let's say, can I find you one right now? Okay, here's a double pullback signal, which we know is a good signal. It comes out. No, that one had good follow through. Actually, it's easier just to find the signals that work, because really those are the ones we're most interested in. Here's another trend change signal. The signal printed. Is everything in sync? Is your cloud in sync? Is your filter in sync? Are your bars in sync? And what I was finding was that I was getting out of sync signals. Therefore, I sped things up just a little bit. Okay, I'm going to roll to parabolics now for my stop strategy. And the trade manager has me at break even. And so far, so good. Oh, Salisha is asking me a question about the journal link. It says, this might be an odd question. Could you talk about the journal link, please? It's not an odd question. Journal link is a piece of software. I think Indicator Warehouse is actually still giving it away, that links your trades automatically to a journaling program. And I'm terribly sorry, I forget the name of the program. I haven't used it for a long time. Adam introduced it, I don't know, it's got to be almost a year ago now, I think. And it's a cool system. It really is. I'll tell you the nice thing about it, and if you could please remind me of the website. Actually, let me see if I can flag Adam. No, he's not online at the moment. Let's see if I can find it. Trader View. Thank you, Mark. I'm looking all over the place here and I can't find it. Oh, I'm drawing a blank on there. Oh, yes. Thanks, Mark. Mark's correcting my spelling. It's Trader View. Spelled V-U-E. Thank you, Mark. All right, so here you go. This is Trader View, V-U-E. And Indicator Warehouse actually developed a link that it will automatically submit your trades to their trading journal. So you don't need to manually enter them. Normally what you need to do is you need to enter them, And then you can run all these studies on your charts. They'll automatically help you analyze what's been going on. The overviews are kind of cool. You can see your profits, your losses. So it does all this automatically for you. The nice thing about TraderView journaling also is that it does give you a place somewhere in the report that you can make notes of why you took a trade. And quite honestly, folks, to me, that's the most important part of journaling. I wish I could show you my current journal, but I'll show you my past journal. And many of you will have seen this already, but I'll keep it brief. I think when you're journaling, it's very important. Well, you can journal. This is just a spiral bound notebook. You can see I took a scan of it. I should have put the year on here. This is from a couple of years ago, November 8th. I put the year at the beginning. But my shorthand has changed a little bit since I wrote this. It's an evolving process. But you're going to see you're going to develop your own shorthand. The thing is that you're going to see you're not just interested in where you bought and where you sold and what the profit or loss was, right? Even NinjaTrader does that. When I get together with people and I realize I'm not the most tech savvy person in the world, but when I get together with people and I ask them for their journal, this is what they send me. They send me this from NinjaTrader. No, that's not your trading journal. This is just statistics. I don't care about the statistics. I want to know why you took a trade. And that's this little segment down here. So not only do I have the trade parameters, I have the time I took the trade, bought or sold, the tool I was taking. So E is for Eagle, H is for Hawk, F is for Falcon. My entry and stop loss. I also write my profit objective now, how the trade worked out, but more importantly, why I took the signal and what did I learn from it. You should always try to learn something from a losing trade. All these things that you see, actually, this might have been through the development phase, all these things that you see me point out to you, like first micro macro crosses, like second push entries, these were all developed here. See, 1MMXO, first micro macro cross signal. Okay, that one resulted in a loss, but it's because the market was in a downtrend and I was trying to buy. Look at the other ones. First micro macro cross off of a failed buy. Good signal. First micro macro cross. Good signal. The Falcon, first signal on a second push entry. That's how you learn all these things. By doing a journal. And it takes just a little bit of effort. Don't tell this to the guys at TraderView, but I think it's easier just to write it in a spiral notebook while it's fresh in your mind. I tend not to review my journal that much. The learning process is actually in the writing, I think. I think when you go to write it down, something imprints on your mind as you're physically writing it on a piece of paper. If you haven't journaled before, just grab yourself a stack of paper or a spiral notebook. Really, you don't need anything special, and commit to it for 2 weeks. For 2 weeks, write down your trades, write down the results, write down your thinking, and I guarantee you after 2 weeks, you're going to see some results. You really will. Yeah, Michelle says we're getting a first micro-macro cross here on the NQ. Possibly, yeah, we're waiting for that macro signal to pull back or to come into sync. Do you see the problem here? The market obviously still very indecisive, but what's happened? We've broken through. We're retesting. Which way is it going to go? This looks very much like a bear flag. I would not be surprised to see it break down. Of course, if it comes back with a first micro-macro cross, then I'm kind of committed to buying it. We're into yellow bars now, so I don't need to worry about it so much. Okay, getting another trend signal. We did get stopped on break even on the other one. So I'm going to let the ATR turn over, which means that I can pretty much enter below the low. Shoot, too much. I'm trying to give this market some room because it's floundering so much here. Oh, soybean prices on a tear to the upside. Okay, couple great questions here. I'll start with Salisha's. Salisha's asking, could you go over the ATR entry via the Mike Filigera method? Absolutely. This squiggly blue and red line you see on here, this is simply an overlay of the ATR strategy. Now, if you don't know how to do that, go to your indicator window, scroll down to all these indicators that say IW, and here you're going to find one called IW TM ATR Trail. This is actually part of your trade manager. Double click on that, it's going to appear down here. You don't need to change anything, just apply it, click OK, and you're going to have this little blue line on here. Now, you know that I don't add anything to a chart unless it adds to my decision making, unless it helps keep me on the right side of a trade. And this is one tool that has proven to be helpful to have as an added filter. So here we're getting a signal, and by the way, this one would have worked out regardless, but I'm just using it for example's sake. Where the signal is printing, but we're below the ATR. So rather than take it right on the hash mark, as I would like so, only to have the market bring me in and then start reversing against me, I'm going to let prices trade through the ATR to flip the ATR over, which occurs on this bar right here. See, it traded through the ATR has now moved underneath. So what I do now is, rather than use the hash mark as the entry, I'm going to use the high of the current bar as my entry. It's just a little added incentive. And then the market eventually goes up to our profit objective. All right, so what I'm doing right now is same thing. We're against the ATR. See, had I taken it on the hash mark, I would have sold here, probably covered up here. The market brings me in and now starts to reverse against me. Now, that's not to say this trade won't work out, but had I waited for the ATR to flip over, I would not be in this trade yet. I would have needed this bar right here to close low. That would flip the ATR over, and then I could have entered below the low of this bar right here. So we're going to pretend that this bar closed down here. That would have flipped the ATR over. Then I would enter below there and maybe set up a trade like this. So it's proved itself to be a very good filter to try to help keep you on the right side of the market. The downside is by waiting for an extra bar, you're making the market move just a little bit more to try to find your profit objective. But so far, it's proven to be useful, which is why I've been using it. So yes, big thank you to Mike Filiguera for that little tip. Mike is asking, can you please explain a bear flag? Sure. All right. When you have a market that is trending, you're always going to get these pullbacks. Right? We know that. The market never makes a straight line anywhere. Right? It goes up for a little bit and then it comes down. Goes down for a little bit and then it goes up. A bull flag is the pullback portion in an uptrend. A bear flag is the pullback portion in a downtrend. So where we're at right now, the market has been trending lower. So we get this little bit of a pullback here. I'm looking at this and I'm wondering, well, is that truly a change in trend or is it only a bear flag? A bear flag would be a continuation of the downtrend once it broke out. You're going to notice when you look through, especially your hawk chart, see here where the market is trendless, there are no bull flags or bear flags. It only occurs when the market actually has some direction. But you're going to look at these bull flags and bear flags and you're going to see, oh, we're getting 4 arrow consolidations. That's what happens when that's actually the impetus of the 4 arrow consolidation. Here's one right here. So we have a little bit of an uptrend. The market comes back. 1, 2, 3, 4 arrows, continues higher. That turned out to be a bull flag. See, and always go with your obvious trend, right? Let's not micromanage this. If you're looking at your chart and the market is going from the bottom left to the top right, you are in an uptrend. If the market is going from the top left to the bottom right, you are in a downtrend. I work with people who look at a chart and they say, oh, okay, well, it wasn't an uptrend here and now it's come down and it did a little bear flag here, so now we must be in a downtrend. No, don't do that. You're going to micromanage yourself right out of your money. The market will always make these little intermediate swings, right? We don't care about the little stuff. We care about the big stuff. Which way is it going today? Well, don't really know. It's going down a little bit, going up a little bit. But that's, even now, Micah, this could still be a great big bear flag. even though we've produced a first micro-macro cross signal, you see we still haven't made, well, this could be considered a test of the extreme, so it's all getting, becoming a bit of a jumbled mess here at the moment. Hence, more yellow bars. And the market has been paying off. Did we win on a bullish trade? I guess we did. We won on a bullish scalp and we won on a bearish scalp. So it's paying off both ways. The eagle, both times we got taken at break even, or break even plus one, so at least the broker gets paid. Gonna get a very nice Christmas card from the broker this year. Oh, fantastic. See, here's a great Joe says brokers always win. Yeah, that's true. Well, they're not in the business of making you money. I like this, what Mark wrote. Mark wrote, I agree with you. This is regarding journaling. I've taken your lead and started a written journal. It's a bit cumbersome at first, but after doing it for a while, it's become habit, and I'm learning from my mistakes and successes and making improvements after 15 days of doing it. There's something magical about that 2-week threshold. Honestly, folks, if you stick to it for a couple of weeks, you will amaze yourself. Mark writes, I've been $2,800 profitable in that time. Congratulations, Mark. That is fantastic news. That is fantastic news. Michelle asks, Eric, why don't you just use the train indicator ATR to do this? Regarding the filter on the eagle. Yeah, go ahead. You can. So you see here when we're looking on the eagle, because the eagle is looking at bigger trends, see, that doesn't look so much like a change in trend on the eagle, does it? It's starting to smell a little bit like a bear flag. We're coming back here. Now we've got the sell signal. Still against the ATR, so I'm not going to get too terribly excited just yet. You could take it. It is a hard edge bounce, right? You could risk it up to here. You could get your earlier entry. I'm going to be giving up a good 5 or 6 ticks to try to get entry on the other side of the ATR. We're just beating ourselves up here this morning. All right, well, the good news is that signal didn't trip. So even if you had taken it on the hash mark, you're still all right. Getting a trend change signal here on the Falcon now. Does the Falcon know something the rest of us don't know? All right, just printing the signal hasn't engaged it just yet. All right, so I'm going to dial down the risk amount. I'm going to enter here, and I'm going to try to cover it all the way down there. Oh, going to hold my stops. This is, without question, a risky looking trade. Yeah, Michelle says if you change your ATR here to 2.0 instead of 2.618, then it will also act as a filter. So Michelle is saying you can do it like that. The only problem with that, Michelle, is what if I want to use my ATR as my stop strategy? I suppose it's not a big deal. I can just change it over. Joe's asking, when I add a position with the trade manager, it merges the entry but does not do that for the stop loss and profit targets. So it's not adding an extra contract to your stop loss? That might be a Ben question. So I'll shoot you Ben's email. You probably have it already, but for those of you who don't, if you have tech questions like that, Ben, his email is support@Indicator Warehouse. Yeah, crude inventory is not out until the top of the hour today, Michelle. Because of the holiday this week, crude inventory comes out at 11 a.m. Thursdays, 10:30 a.m. Wednesdays, every other time. No, that's all right. Michelle's apologizing. You don't need to apologize. Like I've never forgotten a report. Really? I forget reports all the time. Let's take a look at crude, see if it's going to give us a bracketable range. Not yet. They're on the skids today. I don't know. We'll see how much spark the inventory report brings them, but right now they're looking a little bit soft. As does the rest of the market. So we're getting some conflicting signals. The Eagle still battling that hard edge. The Falcon tried to give us a buy signal. It's since retreated from there, so we will cancel that. And here comes the Raptor with the sell signal. Now, the cool thing about the Raptor is sometimes situations like this, you can just hit the sell market button. I guess I better enable the stop strategy. Rather than try to, right click, place your order. If the market has tripped the signal, this was a double pullback signal, by the way, folks. Maybe we'll go with the swing. There we go. Give it a little bit of elbow room to start. Trading back now near the lows. Dangerous territory. But that is one feature that I do like on the Trailblazer, is that, and you can hit your entry, your buy sell market buttons on your trade manager also, but it's the whole one-click type deal here where you get your stops, you get your targets. Let's take a look now at our Eagle, which has, it's about to turn over the ATR. So I can tell with my handy dandy Logi counter that that's where the low of that bar will print, and that's the bar that I would be using as my guide for selling. So we're currently sitting on the ATR line. I know if this bar closes low, it will flip the ATR over, so I can actually use the forecast low of that bar as my entry. Struggling with the lows, just looking for a little bit of a continuation. Oh, good to know. Salish is saying you went, thanks for suggesting the Trailblazer. I went ahead and bought it, and it definitely helps in my entry of the trades and improved my trading. I don't miss ticks or entries. Fantastic. Ooh, getting a first micro macro cross signal here on the Hawk. We can still try to take that one on the second push. Same kind of situation across the board. Now we're getting a trend change signal here brewing on the Falcon. So the trend line has changed color. Here's the down, here's the up. We are working on the second down portion and the completion of the signal. Currently we just have the warning dot. Ay, 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 ay. They're trying, they just are not following through. Get down there, you scoundrels. Oh, here, let's, we're going to try to do use our sell buttons. Now the difference is here, if I use the buy and sell market buttons like on the Trailblazer, it's going to default to this quantity up here. It's not going to employ our risk manager. But I'm just curious whether or not I'm going to get, oh, actually, you know what, I can do it anyways. See if I get my profit and my stop loss. Well, I get my profit. Stop loss is enabled. Why do I not get my stop loss? Okay, so that could be a feature that is unique to the Trailblazer. There we go. There's our sell signal. We're going to cover here. I'm going to take it right on the hash mark. Chances are if I get filled there, I'm going to get filled on the low also, which you can see would have been the case. And let's go with the swing high. There we go. All is good in the world. Okay, so we're hitting some profit targets, hitting some break evens. It's just turning out to be a wonderful day. Still struggling with the lows though. My goodness. Come on, NQ. Let's go. Get down there. Here our Falcon trade just hovering above our profit objective. And the tick that I gave up for entry, that's how much we're short of our profit target right now. So something to remember when you're gauging your high probability profit objectives, they're always based on hash mark entries. So when you postpone your entry, you're going to make the market move that much further to trying to find your profit target. Okay, so Joe says, all right, so Joe, are you adding a second position using your trade manager, for instance, adding your entry like this and then perhaps putting your stop loss here? Yes, okay, that's what Joe's doing. Yeah, you know what? I don't know. I've never tried that. So let's see here. I'm going to roll this stop back. Just see if we can ride this swing out to see what happens if we get a new entry. Oh, I don't want to break anything. All right, so I'm going to enter here and place my stop loss here. That's a good question, Joe. I've never tried it that way. When I've added positions, it's always been by right-clicking and adding an order, or by using the buy or sell market buttons. And what it does in that instance is it will tend to average my entries. So I need to make a mental note where my actual entry was. So Alicia's asking, can we trail two strategies, or can we use two strategies at the same time? In other words, Trailblazer and Trade Manager. I don't know. I've never tried. I don't know if they would conflict with each other. They might. I'm not an expert on NinjaTrader strategies, so it might be a situation where the software will conflict with the two pieces of software will conflict with each other. Now, I'm just rolling this back here so that I can try to get another entry and see what's going on for Joe here. And the market keeps moving the other way. Here we go. So we're probably looking at some sort of reaction here. All right, so it just brought me in. Well, I do have two separate profit targets. And now let's change here to a different stop strategy. Oh, that won't work. We'll do the bar high low. Yeah, I don't know why that's still printing up there. I do have four contracts trailing. That's definitely a Ben question. I've never tried it that way. Like I say, Joe, usually if I'm adding to a position, I'm doing it this way, where I'll place the order. Let's see if we can't get that one engaged. That should change my positions to all read 5, or on my stop loss anyways. Come on, just a little bit lower. Yeah, I see Joe says it trails both combined, but the second stop loss stays on the screen. So just like this stop loss up here stays on here. Yeah, it might just be a little bit of a programming bug that it's not deleting that once entered. I don't know if the programmer ever intended it to work that way, to actually add positions to it. I don't see why not. I think it might just be, like I say, a little hitch in the programming. Oh, Michelle's got a quandary. So let's see here. Okay, we'll put that on the shelf. Michelle says she's short the NQ Eagle right now, but unsure how I should manage my stops. Michelle, you're supposed to have a plan. She says, should I roll to break even? Well, we just came up short of our break even trigger. If you're still in the trade, you may as well hang on to see if the sellers are going to muster another move lower here. The buyers have stepped up, right? We know where the buyers are. The sellers have had control of the market this morning. They did push from here. So if you haven't, I'm not exactly sure where your entry was. If your entry is a little bit higher, you could certainly become a little bit more aggressive with your stop. But right now what we're waiting for is we're waiting for the sellers to take the market back. Now, if the sellers fail here, of course, well then our stops are going to be hit. But right now, I think the best plan of action is to look for this. We're in this retest mode at the moment. And just to give the sellers a chance, they had enough here to force the market through these lows before at 45.31. The buyers have pushed them back to the same region. Yes, they fudged the numbers some, but it's the same area. So now the sellers are trying to press, and here come the buyers again. And then as this bar forms, if this bar, ideally finishes lower, then yes, that would be a good bar to become more aggressive on your stops. Let's see where I may as well close this out because I forget exactly what we were doing here. But you can see the market still floundering somewhat. Okay, so now we're getting a trend change to the upside. So the buyers are looking a little bit stronger. It would be a good time to get your stops in a little bit cozier. This is the line up here, though, that the sellers are defending. Right? As we get closer to that area, the sellers will become more aggressive. We're getting a whole lot of waffling now. More yellow bars. Back into another sideways range. Technically, this is a green bar sell. Oops. Which is trying to pop to the upside. Excuse me. I hate wandering markets. Hate them. Okay, we're into the hard edge of the eagle. So here's a good example of the trade-off that you encounter using the ATR as a filter versus entering on the hash mark. You see how much extra I gave up to gain entry. Had I taken it on the hash mark, well, I would have at least hit my break-even target. But all is not lost, not yet. Sometimes you need the mindset of a card player where your risk amount, that's your ante, right? That's what you pay to play. If the ante is too dear to you, dial down the risk amount. Because we're dealing with future events here, folks, right? Nobody knows where it's going to go from here. We have our best guess, but nobody really knows. Oh, one other little tip about journaling is that you should always have two reasons for taking a trade. That was a tip somebody shared with me a long time ago. I thought it was a tremendous tip. Always have two reasons for taking a trade. We had at least two reasons for taking this trade here. We were seeing a retest. We had a hard edge bounce, a with trend signal. I'm not so concerned about the direction at this point as I am stop placement. And is my stop far enough away to let me ride out this swing? I want to see the sellers dig in early here, start selling it. I don't want to see the sellers wait for the buyers to get up to this level, and certainly not to that level there, because that's going to stop me out. I want to see the sellers start getting aggressive, selling the market here. And now, if this bar closes lower, I'm going to start rolling my stop down. Because that'll be the last chance. Okay, Frank's got a logistic question here. Frank says, Eric, I have each index on a separate workspace with 4 charts. Is there an easier way so I don't have to open 6 to 8 workspaces every morning and add the trade manager every day? Well, I'll show you how I do it. Well, I can only show you one monitor at a time. I've got 3 monitors. 2 of my monitors have charts. The 3rd monitor has the screen recording software, the screen sharing software, and so on. But as far as saving workspaces go, this is all that I've done. Okay, so I've got my workspace. I've got 3 markets up, so I've got the NASDAQ on one monitor, soybeans and crude oil on the other, and I just saved it as DTS RTS. That way I know it's my DTS and my Raptor. So I've got all my charts that, or all the markets that I'm trading in that one workspace, rather than have a workspace called NASDAQ and a workspace called Mini Dow and another one for the Russell and so on and so forth. I just put them all into one workspace. It literally takes me 5 minutes to set up, how many charts do I have here? 10 charts. I just open the workspace, I apply Trade Manager, and that's that. Okay, we're getting closer to crude inventory. Time for a little bit of fun. Hey, well, we don't really have a tradable range here, do we? So I think what we'll do for this inventory report is, normally what I like is, if we have the market confined to a sideways range, I'll bracket the range and buy or sell above or below it, but we don't have that option this time around. Okay, I'm going to go with a more liberal strategy here, something to give me a little bit more elbow room. And what I'm going to do is I'm going to employ my friend's strategy of letting the market break the inventory. So let the inventory report hit the floor, let the market get its initial gyrations over with, and then see if there's a range and bracket that range. Just a little note here, we're getting a first micro-macro cross signal in crude oil. So according to the hawk, things looking a little bit more bearish at the moment. We'll see if inventory makes its, or if prices make their way here to the middle somewhere around 56.90. That would give us a bracketable range. We still have a couple of minutes. Still waiting for the sellers to get their act together on the NQ. Ay, 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 ay. So the Geiger counter is a little bit of a spike there. That could be some stop running. That would be all right. Yeah, overall this market very sideways again. Okay. Well, they're almost up there. They're almost to the point where I could bracket this little move right here. Sell below, buy above. Should have watched natural gas to see which way natural gas moved. Although from the, oh no, there wasn't that much activity. Natural gas was released right around here. Crude oil took a little bit of a dip, nothing too terribly serious. One more minute. All right, should hit the floor any moment now. There they go. All right, so is that a tradable range? Oh, looks like it. So we're going to throw a buy stop in up here, a sell stop below here. And now we'll see which way the wind is blowing. So the primary support, this blue line just above us, which should act as resistance. I have my stop enabled. That's good. Oh, I should have disabled my break even. Sometimes the market moves a little bit too fast, although it looks like it's settled in somewhat. Okay, I'm going to go with the chandelier now. Well, they thought it was bullish news to start, and now they're not so sure. Wow, that's odd. Not sure I've ever seen them hover quite this long. Here's the eagle, which also shows us this very plainly. So if you didn't already bracket the trade on the Falcon, here's a very bracketable range. And the eagle coming in with a with trend sell signal. So just about to print that signal right here. And I think we're just about to get filled. So I'm going to cancel that buy order. Come on, crude. Aha, Mark's got the news already. He says oil inventories fell more than expected as per the news. They're short 2.8 million barrels. Somebody misplaced. Okay, so that should be bullish news. And yet the market, apart from an initial hop to the upside, is not really, well, that little blurb there was bullish. And then they kind of hit the skids again. Sometimes it's funny how they make the news fit the market. If crude oil does continue lower, it'll be interesting to see what they say about that. Why it headed lower. Somebody found the oil they misplaced. Oh dear. Oops. There we go. Come on, crude. Come on. You know you want to. Aye, the NQ still sideways here. Still struggling. Working on a green bar sell. That's encouraging. But we've also had two breaks against the hard edge. This one's going to need a little bit of nursing to get it to where it needs to go. Hey. A little spike on the histogram there, not a welcomed spike. Yeah, Mark says, never really sure which direction the news will take the market. No, sir, that is for sure. Well, we'll throw that one on the back burner for now. Just let it simmer. Haven't been paying much attention to soybeans this morning. They did make a couple of interesting moves. Well, maybe not. It looked a little better on the Falcon. Let's bring the Falcon over here. So we had a early trend change signal shortly after the market opened. This one, honestly, is easier to see in hindsight. But with the early trend change signal, we're always looking for that test of the extreme, right? And the failure. That's what gives us some confidence with taking the early trend change signal. Soybeans were good yesterday. Some very nice moves out of the market yesterday. And even the day before. But for whatever reason today, they're dragging their heels a bit. And everything's gone quiet again. Well, we'll hang with them for a couple of minutes still. Otherwise, I think we're going to button up the room. Tomorrow's Friday, of course. I've got a busy weekend planned again. Oh, I hate busy weekends. I like people to leave me alone on the weekend. Yeah, crude's still very uncommitted. Just bouncing back and forth right now. And the NQ not looking all that impressive either. All right, you guys, we're going to wrap up the room for today. I will see you again tomorrow morning. And we're going to close. Yeah, Joe says generally a good day to stay out of the market. If you are trading this afternoon, be extra careful. I've kind of been bearish on the NQ for a while now. I wouldn't be surprised to see it slip a little bit lower, but I don't think we're going to see a substantial move lower. We're going to close with Mark's question. Mark says, on oil, wouldn't less supply be bullish news? Supply and demand being the equation, less supply, prices should go up. What are your thoughts? Excellent question, Mark. And you are absolutely correct. Less supply should be bullish news. However, supply is always, or news is always taken in relation to market expectation. This is why I believe it's futile to follow reports. People always ask me, well, Eric, do you trade before a report? Do you trade the report? Do you care about this, that, and the other thing. There's only a handful of reports that you need to be aware of, and it's more being aware of the time of the report than the report itself. So if you are trading crude oil, obviously the crude inventory report tends to give the market some direction most days. If you're trading the currencies, if you're trading the indices, FOMC meetings generally will spark the market. However, the way the market is moving right now, I can tell you there's probably an FOMC meeting. Actually, it's the G7, isn't it? The G7 are together. So that's probably why the market's as quiet as it is. If you're trading the grains, the World Agricultural Supply and Demand estimates, WASDE, is a biggie. Those are released every quarter. So those are the dates that you need to be aware of, because those are the dates that are going to kind of spark the market. But as to the report itself, I learned years ago when I was watching wheat, and I thought I had a good handle on the report, and I forget the exact figures now. But the report came out, and it was a very bullish report, and prices went down. Just like in crude oil, the report is bullish, but crude oil prices aren't going higher. Why? Well, if we take a look at what crude oil was doing before the report, here, let's bring the hawk over. What was crude oil doing before the report? Oh, prices were sliding. Okay. So the report came out. On the surface, the report seems bullish, but obviously it is not as bullish as what the market was expecting, is it? So the report is always taken in relation to market expectation. Just like my example of the wheat report. Yes, the report on the surface was bullish. It was not as bullish as what the market was expecting. Therefore, prices went down. And it happens so often that it's actually one of those trade-in axioms that markets rally off bearish reports and fall off bullish reports. It all has to do with how the market is perceiving the report. And everything that was known about the market, and don't think for a moment that these people that aren't shorting crude oil here don't have some sort of indication as to which way the market should be moving. Yeah, like Mark says, the movie Trading Places, this is not. No, it's not. But they had some inside information also. All right, you guys, we'll catch up with you tomorrow. Talk to you then.